Good morning, guys. I hope you're well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com, and I want to welcome you guys to today's morning update. As always, in the next 600 seconds, I'm going to provide you guys with a quick update on the main markets such as the euro dollar, but Bitcoin and crude oil and DAX. Before we start though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk that we'll lose more than our invested money. And the reason for that is because we usually tend to trade with leverage. And obviously if you trade in with bigger positions that you have in your account, then you can lose that. For more on this, click on the risk disclosure statement down here below. Now, if you're watching this on Periscope, then we host these webinars Monday to Friday here at the live trading room at TradeCaptain.com, which is a financial news website and trading website that provides news and education. And today we are actually hosting live coverage of the UK unemployment report that's going to be out in about 28 minutes from now or so. Yeah, 28 minutes from now. If you want to sign up to that, click on education webinars, and as soon as we finish here, we're going to shift to the other system, and then we're going to start that webinar. But for now, let's begin by taking a look at the euro versus the USD. So this is the euro dollar, and the market is moving to the downside, and I was anticipating the market to bounce from pretty much 124.15 right now 123.12. Now the market here technically still remains in an uptrend. You can see how over the last few weeks and the beginning of this year, the market has been creating higher and higher lows, right? So my initial idea was to just be long here and stop down here. But as I communicated to you guys yesterday, it's probably a better idea to adjust that a little bit lower. And every time we adjust the stop, we need to reduce the actual position size accordingly, so we don't end up losing too much money. To give you an idea, if I'm long here and I was risking 1%, well, if the market goes down here, because this is another 70 pip or so, it will be a risk of 1.5%. So obviously, if you are at 1.5% risk, I think that's normal. But obviously, a lot of people don't do that. They trade much more. They trade, 5, 10, 20% of their account on one go, and at that time, you definitely need to make adjustments. Well, that's what I would have done, at least. So for now, I remain bullish. Obviously, the market did not bottom out exactly from where I thought it was going to bottom out, and sometimes that happens. But as long as you trade above this low here, which is the 122 level, I do think this market could head to the upside. And this is the price of Bitcoin, and Bitcoin, went straight into this 12,000 high. This is the pricing from Bitstamp exchange, and the market, is struggling a bit to trade higher. And if you're just trading short term, this could be a little indication that maybe allow it to go up a little bit more, or maybe 11,500, and then maybe book a profit here. The last thing we said, last idea was here on the 14th, and the market is up to our favor with 20% since then. But I think if we not take out this level here, then the market could come back down to 10,000. And then obviously from these levels, I do think traders are going to look to go long again, from about 10,000 all the way down to 7,789. But if one is just trading short term, then you can see just on the charts is that people are booking profits here. Otherwise, we wouldn't have that little pullback, and that it would be booking profits here and then look to go along on the other side. Myself, I'm long from the lows here. I'm gonna give it another day or so. I'm not necessarily gonna book profits here immediately because I'm looking for the bigger picture. But if I was scalping, trading short term, then I will be booking profits here right now. So I'm gonna give this another day or so. If I can see it still struggles, maybe by this afternoon I might just book profit, or this evening I might just book profits, and then maybe look to buy back at the lows. Here's the price of crude oil, and crude oil moved to the upside. Didn't go all the way to my second target as I anticipated, because we had an idea here looking to go along at $60 and $60 and 25 cents or so, and for it to go up to 63 and book profits there. The market moved as high as 62.59, and then it struggled to roll over. It struggled to move and add to its gains. Now The market is down at 60.73 soon, and from those levels, I think the market is probably going to look to go long. You are seeing these, you see these sort of candles here. Really, it's difficult for the market. It's just grasping, it's trying to go to the downside, but it's not really working out for it, right? Now, I do think it's going to continue to go to the downside, so I wouldn't, jump the gun and turn bullish from these levels. But I think this is an indication that, people are, potentially looking to buy here. And this level, if we use a simple fib from this low here to the high, you can see that this is a 50% correction, and the actual level I'm watching is 61.8, more or less. So I'm bullish. I do think traders are probably going to look to go long down here and buy. Here you're dealing with a risk of, what is it, 1.95% or 119 pips, and a potential profit here of 234. Gold, pound, Aussie dollar, New Zealand dollar, dollar yen, they're all correlated. There's no major difference right now between the euro dollar and gold, and the trend is bullish. I'm bullish above this level. Again, I think he's still in my buy zone, so I'm not really that alarmed, but it's not too great when it goes all the way. It hasn't obviously gone all the way down, but it's moving close to all the way down. Because the thing is like this: if people were genuinely bullish about something, they wouldn't wait for price to move all the way back down to support. Imagine that you want to buy a new TV, and you've been looking at that TV. Actually, let's not take a TV, because TVs will usually just go down in price. So you want to buy something nice, doesn't matter what it is, something nice, and then suddenly you have a nice 10% decline or discount, or even 15% decline. You would probably look to buy that if it was something genuinely good. But if something you're not really sure of if you want to keep or not, or if you actually want to buy it, then you don't care. You waiting for the bigger and bigger decline, or bigger and bigger discount. Sorry, and then you'll buy it just because it's so cheap now that um, you'll definitely have value from it. And this is a little bit what's going on here. It declined a little bit too much for my own liking. I would argue that if we could bounce here from 1,337, I think they would have told me that people actually generally want to buy gold. But here, they allowed the market to move down from the fib, from the low here all the way up high to the high. They allowed the market to move down 61.8. Now that fib level is fine, but anything below that is an indication that this market does not really want to buy this, and that's a problem. So for now, obviously not looking too great. I think we just need to give it a few more days. Fib, as long as it's above, trend level. This was my original trend level, but I'm just gonna get rid of that. Just make it like this, because the worst thing is you just get stopped out and then it just bounces to the upside. Okay. Again, how can we deal with this? Well, to give you an idea, if this was my original position, this is $20. And then you see, okay, if I make this adjustment here, it's another $11. So it's the same ratio as with the euro dollar position. So it's not gonna be perfect, but in essence, cutting the position in half is one way. And then when it goes up, down and up, we can look to add back that whatever we missed out or whatever we cut. That's what I would do with it. Next market, German DAX, moving to our advantage slowly and slowly, but it's really struggling. I do think the S&P needs to go down. I was long the S&P myself, and I booked nice profits on that on Friday last week. I think the S&P needs to go down with a few percent. That could weigh on the German DAX. In the short term, though, as I've been saying lately, around these levels, the first idea I shared with you guys was, just be bullish from 12,413. I said from this level all the way down here, people are going to buy with stops down here, which is 11,861. The market is really, really struggling, and obviously because of the euro. And there's not too much to do about this right now. We just need to be patient, but it can come under pressure, as I suspect the S&P 500 will move back down a bit. As you see, the S&P is moving to the downside, and I think it could decline with another 1.5%, maybe even a little bit more, 2%, before traders start to potentially look to buy what stops at 26.18 down here. Okay guys, that concludes today's market update. Don't forget to like the video. Don't forget to share the video. It's very straightforward. Just click here, like that. And you can also comment. That would be awesome here if you want to. And if you want to have notifications when we go live, you click this little bell and you get a little pop-up. It's going to be up here anyway, so it's not going to bother you. And you can adjust how many notifications you want and things like that. So check that out. As well, you have the webinar coming up. So you need to sign up now. Just register for the live UK unemployment rate webinar. If you already signed in, just click on sign in. And you just sign out in here with your email, password, and then you're done. Guys, see you on the other side in Trade Captain Premium in 4 or 5 minutes for the live coverage of the UK employment figures. Have a good day.